Hey everyone, I wanted to make a kind of end of the year video for 2021 just to recap the year. I made 1.3 million. Just an absolutely amazing year. Although, that being said, second part of the year was pretty rough. It was very choppy. It kind of just, I had high hopes to get over 2 million during the year, and I just got choppy. Got real choppy, and even right now I'm still chopping around. But I suppose that's part of trading, right? You get in a groove, you find something that works, a good flow, a good style, and then things kind of shift. And I've had a lot of success, and I think that kind of led to me not adjusting, because you kind of just get stuck in this mindset of, I've got a lot of success, I don't need to change anything. But I think the reality is I do need to make some changes, and in this video I'm just gonna basically just go back to my roots. Like, what did I start with? And that was just looking at charts and brainstorming, thinking, what is most optimal? What can I do that will give me the best shot of succeeding and making money? So basically, let's develop a new strategy. Let's think about these things. Let's think about the time frames and the flows and how to better capitalize. So I'm just going to start for 2022. I'm just going to start putting in the work again, quite frankly, because that's what you got to do. You got to put in the work, you got to show up, you got to be optimistic, and you really just got to brainstorm and develop something that can work. So look, no issues here. I mean, I'm at an amazing place. 1.8. I've been hanging out there for a very long time, but you know what? In trading, things can change really fast, and all you need to do is fix a few things, study up a bit, and I believe I can just start uptrending again. So let's make it happen, right? So all you can really do is just start looking at charts, analyzing recent runners, looking at charts, thinking, what did I do? How could I have played it better? Where are the leaks in your game? So CELZ comes to my mind. Let's see. So funny enough, I remember seeing it perk like this, and it was moving, and it got my curiosity a bit. I had actually bought this setup because I liked it quite a bit. Nice consolidation triangle, well, symmetric triangle, and as it's kind of breaking up there, I was scooping some shares expecting a big move, just because on the long-term chart, it has shown it's capable of running, and I noticed that in this area it was just very tight consolidation, and it was down quite a bit off of these highs. So hey, I've seen a lot of things bouncing recently, and I just figured, hey, this one's breaking out of that consolidation, got a nice setup on the intraday. Let me take some shares at 220s and see if I can get a rip. So what ended up happening, I took it, right, and it goes up, but then it kind of fizzles out and comes down on me. And at that point, I'm thinking, well, if I swing it, who knows? This market is so unpredictable, it could gap down. I just didn't really understand, I guess, the risk reward, and I figured, if it holds up and holds the range, well, I can just buy it tomorrow or buy it the next day, and I should be able to get involved. And what I've been noticing lately is the plays are really making you have to decide and really putting you in a tough spot. They're putting you in a really tough spot. They're saying, hey, you have to flip the coin here. You have to risk it. You can't really not get involved, because what do you see happens? It gets a PR, basically. And is this even a PR? I don't even know. I don't even think so. The point is, the time frames are very tricky right now. It's extraordinarily slow. during normal market hours, but for some reason pre-market is on fire. So these plays are very hot pre-market. You can see this is the type of range and the type of play that I like to play intraday, but these things just aren't showing up intraday. The moves are happening pre-market, and then they're, yeah, some early morning kind of volatility, but you know that's not really my style. My style is more wait for the afternoon, clean setups to play some continuation flows, and you're just not seeing a lot of that. In fact, you're not seeing a lot of it at all. So again, I've just noticed pre-market very hot, good setups that are actually flowing and moving, having that volatility and that the opportunity. So look, for 2022, I'm gonna have to get up early. And I have to be ready because the opportunities are there very early. And then after pre-market, I can take a break because you know what I'm seeing? Not much. All day long, not much. I am seeing plays show up, kind of like late afternoon. So there are a lot of opportunities late afternoon. But it's tricky because a lot of things look decent. And for example, this could be considered, a washout into some pretty good consolidation. See, and then you would play this. You'd be like, okay, great. I'm gonna get in, see if it leads to anything, and you just kind of get stopped out. It comes back down on you. It doesn't hold any gains, and it goes lower. And I'm just taking a loss there if I go for that. So a part of me just wants to leave this stuff, but then, another part of me is like, well, look at this. The next day it does something similar, although I will say this flow is a lot more clean. This is a bit more choppy. It doesn't really, I would say this daily flow isn't really moving as one flow necessarily, whereas this, you can see the TA is kind of just one flow all day, kind of flowing, correlating together, which I believe makes it a stronger thesis for why you would buy this trend change. It's also a lot lower than this day. So this day it's still at 320, whereas on this day it's at 258. So it is a lot lower. It's had more time to wash out from these initial pre-market move. So there's a lot more going for it on this day, And that entry led to something great. 260 entry, and you get a really nice dollar share move. So, and what I'm saying too is, when you do find a good opportunity, you really got to lock in the gains. The home runs all kind of like one entry, you get the pop, it'll hold gains and then go much higher the next day. I'm just not really seeing that right now. I'm seeing a lot of, it'll go up, you have an opportunity to lock in profits and nail a pretty good play. Just like this one, had opportunity to get involved, it goes up, you have to lock in the profits because you're just not seeing any sort of, it's not holding gains and going higher in the short term. So, recently it's like you're not really getting rewarded for having patience. You're getting rewarded for not having patience, for getting out, locking in those profits, letting it chop, letting it wash back down, and scooping it near your entry, or a lot of times it'll even go lower. But the point is, it's a choppy market. You got to lock in those quick gains, reanalyze it on another day, or if it just goes back to your entry, then maybe you can start scooping again, anticipating, okay, it's gonna probably be able to bounce a bit because that's just the type of market. It's just chopping, right? And so then you get very choppy, but you can see it is holding a range, it is consolidating. So I actually played it in this area. So I got involved in the 290s. I was able to let that flow up, and I locked in profits at the 330s. That was a decent win. I didn't get involved on this day, but I did see it kind of started to form this uptrend. Again, kind of very tricky, right? Because a lot of plays haven't been hot in this time frame, and if you do get involved, these things will just chop you out or just weird price action to where it's very, very hard to hold on. But this one seemed to have kind of a more solid, clean flow. And that was like a 305 entry, and it ended up going to 360. Again, like that's nice. That's a 55-cent move, but that's 55 cents on absolute perfection, which is nailing the very bottom and nailing the very top, and that's not realistic. That's just really not realistic. So I guess the point I'm saying is you're not seeing those really great $2, $3, $4 a share ranges as often. They're few and far between. It's becoming quite rare to get those really nice multi-dollar ranges. They're out there, but it's harder to run into. I know ISIG had some really nice range recently, but again, if you think about this from percentage, it's like, yeah, it's great. Look, it is great. It's great. It's got a great range. But if you have a small account, you can't really play this. It's $18 a share. It's going up $2, $3 percent-wise. It's not the best. It's impressive, yes, but it's not the best. And the spread on this has been insane. It's 20, 30 cents spread almost always. And if you buy in, what I have seen a lot of, like if you buy this at the wrong time, it'll just come down on you 50, 60 cents and in an instant, and the size disappears. It's just, the trading recently has been extraordinarily challenging, although I will say the last week of 2021, which was my vacation week, I actually traded part-time because the market was healthy. It was a green market. It was uptrending. It was healthy, and I actually made $40,000 on my vacation week trading half-time, just trading in the morning a little bit or waking up late, trading a bit, seeing a good setup or two, nailing it, and then just enjoying my day. And I could do that because the market was very healthy. So that's something to think about too. It's, if the market's red and consolidating, it has a huge effect. So, for instance, the week that I was talking about was kind of in here. It had recovered, it made new highs, and was kind of holding up, right? So it was holding a breakout, and that was, obviously that's healthy, and the market, the overall flows and the overall plays, you could just feel everything was healthier. You know, the algorithm, it's kind of weird. It's like, from my experience, there's always an algorithm. It's always working across the board on every stock on the market. And it's like, if the market's going up or consolidating in a healthy way, that algorithm will ever so slightly be biased towards being bullish. And you can buy things, and then the price will kind of jump up, and it'll uptrend, and it'll be healthy. Whereas if the market is, like this week was awful. It was just a red week, lots of weakness, selling off. It was awful. And the algorithm also kind of, if you would buy something, it would just, as soon as you would buy, it would send it lower. It was like everything was designed to go down, and the algorithm helped it go down, because that's just what the overall market, the bias of the overall market was just bearish, right? So then you have to be much more selective, and you got to be more careful. But at the same time, there were some good plays. I noticed ISIG had held up gains throughout the afternoon, and I started buying this uptrend. So I bought in at 23.50 area. I want to say I bought it right here. It came down a little bit, and so this is what I mean by this market is difficult as far as the spreads go, because I bought 2,500 shares at 23.45. It goes up to 23.70, which, if you think about it, that's like $600 I'm up, and then it comes down, and now the prints are going into the bids at 23.20. So technically, I'm down $500, and if those bids don't hold and it cracks and gaps or something, then all of a sudden, I mean, technically, I could go down, you know, $1,500 just like that, real quick. And then what do I do in that spot? I mean, I guess I would have to cut and just take the loss. And so there's a lot of that. This market is so choppy and illiquid that you're getting a lot of that additional risk. I wouldn't even like to risk that much on this spot, but I kind of had to. And that's what I'm saying. You just have to risk more. And that changes the statistics a bit. And that makes everything harder, of course, when your losses are on average bigger because of the chop and the spread. And it's challenging, right? But that leads me to, I guess, my next point is trying to rethink some of this stuff and rethink how I trade. Instead of going for the breakouts of the moves, maybe it's time to think about, well, what's the bottom of the range? What's the core? Kind of the key consolidation where that key support is. And if I just look, I would say it's something like this. It's this 2267 area. So perhaps when I see it do something like this, okay, kind of holds and then starts to come up, maybe the right move is going, okay, I'm going to go ahead and put in a sitting limit for it to retest this key horizontal support. So I'm going to go ahead and I'm just going to put a sitting limit at 2270. Well, hey, in this exact scenario, it would have worked out perfectly because it tries to find a bullish trend, it kind of fails it, comes back down and retests. There you go. There's your 2270 fill. So now instead of having to buy into the ask at 2245 to try to kind of get this continuation, this bullish trend, instead of 2345, I can put a sitting limit on the bid at 2270. That's a big difference. And not just that, I mean, I'm risking probably at worst 50 cents if it doesn't hold here and cracks and goes down hard. And maybe that's a 50-cent risk, but in this choppy market, what I'm saying is the support is holding quite good. And if anything, you're getting those bounces off support, and maybe it'll fizzle out and come back down, and I can get out break even perhaps. But in a choppy, kind of slower market, buying, utilizing limit orders at former support, that former support gets hit a lot more often than in a kind of more bullish environment. And so I don't need to take this trend change entry here. Like, I'm not forced to take these things because there's no rush, because statistically it's coming back down more often than it's not in this environment. Whereas before, look, if you don't buy that trend and you don't buy it now, you miss it because it's so bullish. It's just going up, right? You don't have the luxury of patience because you have to get in right there and then. That's not this environment. This environment is you can take your time, you can put in a sitting limit as support, and more times than not, you're going to get hit. So I think that's the tweak I got to start making, utilizing some limit orders as support. I really think that's the way to go in this choppy market. So let's see what happened. I wanted to try to go for a new high day breakout, kind of correlated on the multi-day, and everything was looking good, and then it just slammed on me. So I sold it here instead of locking in profits here. That's $1 a share difference. So instead of making $5,000, I made $2,500 or maybe $3,000. Either way, I mean, it's a decent play given the risk, though, because given how much risk there was on this entry, really not the best trade, honestly. And then I took one here because I saw this setup. So I took this 24. I actually got in at 24.14. And then I guess I got stubborn or something because I ended up selling it. Yeah, I got stubborn here. I sold it at 23.80. So that's the type type of stuff that's happening to me recently is, I don't know, it's just hard to know what's going to work or not, and because the market's slow and choppy, I'm giving these things a lot more time than I should. I think that's the reality. The reality is I'm giving it way too much time. Like, this showed it was failing and getting weak, but I was just stubborn because I just figured the market's so choppy, it could come back to my entry, hold, and then just like have a rip. Because that's kind of the tricky, trappy, or kind of the fakes that are happening. But you know what? I don't think I can overthink it. I think I just have to do what I've always done, which is I buy in. If the trend doesn't work right away, or if it forms consolidation, starts to break down and starts to get weak, look, don't try to outsmart the faking or whatever. Just be straightforward, and being straightforward would have been just cutting it for break even, and instead I took a $500 loss or maybe more, $1,000 loss on that, and I've been getting cut up quite a bit, being stubborn in some of those spots a lot recently, so I do need to work on that. That's the tough part about a slow market, is because it's moving so slow and choppy, and because things are chopping around and then recovering and then spiking, it gives you this sense that you need to have more patience, or that you need to give it more room to go against you. And in my experience, it's just better not to. It's just better not to. Because you're just going to take huge losses, and it just doesn't really work. It's better to adjust the entry strategy, I believe, which is kind of buying at those support levels. Alright, anyways, AACG. I hadn't noticed this one just because, again, I noticed that things are getting really sold off, are having bounces. It's a big former runner, so it is capable of having a big run. Let's see. Now, I had noticed this because the day before it did this. So I noticed it on the percent scan. I looked at the long-term chart. I said, yeah, that's really sold off. I'm going to put it on watch and just see what happens in the next few days. And then on this day, I noticed it was a really healthy setup where it's just kind of consolidating, VWAP hover, so to speak. So I bought in, I actually sized in quite big, 20,000 shares at 140. It starts to uptrend, starts to really rip, and I think, wow, I might have a home run here. So it goes to 170. And if I lock in those profits quick in the 160s, 170s, yeah, that's a $4,000, $5,000, $6,000 win. But I don't. And I just wanted to have patience, and it comes down on me. And I ended up selling it at 135 for a $1,000 loss. So that comes back to time frames, and my idea on kind of, there used to be a time in trading where if you were ahead of the game, you would get rewarded. But now you don't. And what I mean by that is now it's better if you're ahead of the game. You can get in, it's uptrending for you, great, lock in very fast profits. Think of the beginning as a scalp, because what's happening is it's coming all the way back down to, where does it come back down to? The kind of original consolidation support area. So now it's optimal to just, I could have scalped this for a quick 5K. And then I could have just put a sitting limit in around the average. And I probably could have got filled my size again. I would have had a nice fill. I would have already had some wiggle room, so to speak, because I would have already been up 5,000 on the name from locking in the scalp. And then I could have just let that trend play out. But instead, I got in late day, kind of in this area, as I noticed that it had reclaimed kind of this range, kind of perking above the overall consolidation. It's now holding above it, and I start getting involved. but you know, it's a higher price. I kind of got screwed in the morning on it, so I'm hesitant, and I only take 5,000 shares at this 155 area. I was able to make, where did I sell it? I sold it in the sold it around 230. I think I made 4,000 on it, something like that. But having 20,000 shares from the 130s would have been obviously much better, and I could have pulled that off if I'd played it optimal. And I think to play things optimal, you have to readjust your mindset and readjust how you think about these things as a whole. All right, and that really just comes down to the time frames. I'm early, I scalp, scoop the dip, hold it for the all-day trend, maybe add on this late-day surge. There's just kind of a new way to go about trading, and I think that I can learn it. But it's gonna take some discipline. Okay, this day was kind of weird, but I noticed the morning looked too sloppy to me, but it kind of comes up on this uptrend and it holds horizontally all day, so it holds its gains all day, and then it starts to test kind of this area, and then it's retesting here. So you can think of it like, you know, an all day kind of ascending triangle. That's kind of the scale, and as it comes up, I'm taking shares here at 204. So I just took 5,000 at 204. And I get the pop. I get this just instantaneous straight up pop. Goes into a halt. Thinking, cool, I'll be able to sell it. Probably it'll pop up out of the halt. I'll be able to get 280s. Well, it doesn't. It just milliseconds was this move to 260, and then it just shot back down. And I got stubborn, and I ended up selling it at 225. So I undercapitalized on this play. So I guess this kind of just goes back to the same thing, is things are taking a lot of time, and you shouldn't expect instantaneous new highs. And this is a day 2 where it's like, I got a nice entry, it gave a nice pop, but I should be thinking of this like a scalp. So no matter where the price is out of the halt, I should just be instantaneously dumping it, sell it, you know, at the 250s right out of the halt. Because you know what, these things are not, I've been saying this a lot lately, it's like very rare for the halts to be powerful and to continue unless it's like right in the morning. It seems like the afternoon halts are kind of just fizzling out. There's not a lot of like halt, come down a little bit into another surge and another halt, right? It's like I'm not seeing these back-to-back halts or anything super bullish like I used to see. So now, again, it's just like, hey, it's a day 2, it's coming off of this run, just scalp it. Just scalp it, because it's probably going to take another couple days for anything significant to happen again. This day 3, okay, I played this because I was looking for like a 3rd day surge type of setup, and I was scooping all in this area. I may have added in this area anticipating that, okay, it's kind of held all morning and it's going to come out of this triangle, it's going to curl, it's going to break out. And what did I just see the day before? When it kind of broke out of a level, it was able to surge right into a halt, right? So what happens on this day? Well, it breaks out of the level, and instead of surging up to retest the 250s and 260 area, instead of doing that, it just instantly loses all of its gains that I had just waited patiently for the last 2 hours. I was on this for 2 hours, sized in with an average of 210. I was in this for 2 hours, giving it lots of patience, letting my play work, letting the trend work, and in seconds, that 2 hours of patience got reversed. And at that point, I don't know what's going on. Is this going down because of a bad PR? Did they just drop an offering? I have no idea. And in these moments, you don't have time to think or wait. You either dump it and get out with a small loss, or you don't. And then it could go into a halt, and then it might gap down 50 cents lower if it got a bad PR or something, right? So what I'm trying to say is you're just screwed. You pretty much have to sell it. There's nothing you can do. You're screwed. So I sold it and ended up losing, $1,000 on this. I don't, let's see, 210 to 230. I could have locked up 4,000, I believe. And instead I took $1,000 loss. But that's the type of stuff that's happening in a slow, choppy market. People want to point out all the good, but the truth is, the good is few and far between. A lot of the great stuff forms exactly like this and becomes great. But right now, it seems like there's just a lot of this sort of stuff where if you don't scalp, you get screwed. And it's like, okay, I'll just scalp everything then, whatever. If I'm up 2,000-3,000, I'm just gonna lock it up, and I guess that's the new route to go. Unless it's like a multi-day and it's like, something like this, I guess. And I did indeed play this. So I was aware, okay, at this point, it is a multi-day setup. It's holding gains. It was bullish in the morning, comes down a bit, but it perked back up, and it's like, okay, I could get involved in here, and then if it starts to uptrend and curl, I can get involved, I can play it, let's see what happens. So I bought in at 214. I waited patiently. Luckily, it didn't dump on me, it started to go up, and I was able to sell this. So I didn't really execute the best, to be honest. I waited for some consolidation, wanted it to go up and then surge. But what happened, it started to go down, and all I could think about is what's been happening the last few days. I've been letting things go down out of the trends and then come all the way back down on me, and I just wasn't going to let that happen again, so I sold it at 235. So I locked up $2,500, and then so this comes back to kind of, so let me think how to put this. This dip actually didn't really go down far enough to be considered former support. I kind of feel like former support is 215 area. But this one went to 225, which I guess it is the peak, the top from the morning run. I'm just pointing this out because I ended up buying it back in the 230s. It held this range. I was feeling good about it, but then it slammed, and all I could think about was, like, the day before when it slammed, it came down 20 cents a share, and I got spooked out. So I actually ended up losing quite a bit on this because I got involved in the 230s with pretty big size, and it slammed down on me. I lost $500 or $1,000 on this. But then it holds, and I get this surge, and at this point, it's kind of breaking out of this range. You can think of it like a channel, and it broke out of the channel, and now I end up taking this area. So I took 20,000 shares at 237 average, actually. So I must have anticipated it, got some in here, and then as it was surging up, I added. So 20,000 shares at 237, and I feel bad about what I did here. To be honest, I feel guilty because it actually went to 294, and I could have put in a sitting limit at 287 and locked up a $10,000 win. But guess what? I didn't do that. In fact, I'm still in. So I'm in 20,000 shares at 237. I'm swing trading it into next week, and I know this is going to gap down. This is totally going to gap down. I'm totally going to take a big loss, probably. So, yeah. Yep. So look, what did I say time and time again is the way to go? The way to go is to get in at a good point and to get out when it's high and you're up a lot of money. I got in at a good point. I could have got out at a high point when I was up a lot of money. What's probably going to happen is that it's going to do something like this, where it came back down, which just came down a lot, and then on this day, what happened? Well, it gapped down. So it's probably going to gap down. I'm probably going to be down a lot of money, and then I'm going to have to wait and hope it doesn't dump, and then try to get some uptrend and a bounce back to some reasonable levels to sell into, except I'm not going to sell. Look, the market is slow right now, and it's taking multiple days for multi-day breakouts to even work. So at this point, look, I'm probably going to risk 210, and then if it can, I guess if it can gap up on Monday, that would be best case, and then just start to uptrend. I'll just see what happens. I mean, it's a multi-day pattern. So far, it is very bullish. These candles are green. It's holding gains. I mean, I love the setup. I'm not going to say that the swing trade is bad. I don't want to say it's bad, but it's just not my style. My style is lock in the $10,000 win and reevaluate next week. That being said, you know, the same could be said for CELZ. I mean, it just reminded me so much of this CELZ play, where I get in a good spot and I go, I'm gonna sell it because I don't want to swing it. And look at what happened. It went from 220, it basically doubled overnight, and I missed my entire play because I wasn't willing to swing it. So on AACG, I kind of just was like, I'm so fed up with the slow market. Like, it's a great setup. It's bullish. It's great. It's a former runner. It's capable of gapping up $10 a share. Whatever happens, happens. At the end of the day, it's a $50,000 investment. It's not biotech, okay? It's not going to fail a study. It doesn't have a history of gapping down ever, okay? If it does gap down, it's not going to be a huge percentage. Okay, it's not, what I'm trying to say is the worst case scenario isn't even that bad. And if I do lose money, it's not going to be disastrous. So I'm actually okay with swings like this because the capital is only $45,000. Things become very risky when people start to, or not people, when I, for example, would buy a biotech that's maybe $15 a share, and then all of a sudden, hey, the range on that day allows you to take X number of shares, but all of a sudden you're in $300,000 of capital. And if that thing fails a study or bad PR, anything happens and it drops 50%, well, guess what? You're losing 50% of a $300,000 investment. Now you're losing $150,000, right? In AACG, that's just not going to happen, and the capital is only $45,000. So I don't mind the swing, but I feel guilty about not locking in the scalp because that's just what is optimal. You lock in the quick scalp, lock in that nice $10,000 play, and then I could have scooped a nice dip buy. Okay, so that's what I'm seeing, right? And that's what I'm going back to, is kind of rethinking my process of trading, which is get in, take a quick scalp, and then buy a healthy dip. You can get in, get a nice scalp, but then you can buy a healthy dip. And the point is, I could have sold it at that 287 price point, locked up 10K, and then re-scooped this support, and I could have gotten back in at 250 with full size, and that difference is quite large. I mean, that would have been a $7,000 difference, right, in equity. So taking a scalp approach and then dip buying, I think, is going to be the new meta. Quite frankly, I think that's a new what is optimal. It's just, that's what I'm going to have to do. And I know I'm not somebody that likes change, but it's time to change things up and time to do what's actually the most optimal thing to do. Scalp, dip buy, scalp, dip buy, instead of buying and holding. Okay, buying and holding used to be insanely profitable and used to reward those people the most. And you know, I feel like over time I've gotten to that point where I've developed enough skill and patience to buy and hold. And the problem is the market is not rewarding that anymore the way it used to, unless you're talking about swing trading. Like something like this, where you buy and hold and hey, that swing trade worked amazing. But after that kind of initial play, then there's a lot of chop. Then there's a lot of buy in, take that healthy win, because you can just expect chop for days. So it's kind of interesting in that sense. There's a mix of like, you really need to take into account what day the play is, if the play has popped and started yet. If it hasn't, what time frame. These things matter a lot more than they used to. So as far as if you should scalp something, if you should have patience, I mean, there's just a lot right now. There's a lot. I nailed some plays on ISPC last week. This was good. It was just basically it washed out a lot, and again, I'm kind of noticing these former plays have been bouncing quite a bit. That seems to be the trend right now. Things like C-pop come to mind. It was just super sold off on the long-term chart, and it bounced. Oh yeah, so I played it this day. This was amazing. I just noticed that it gapped up from the night before, and then I noticed it held this range all day. So now you have a symmetric triangle that is formed all day, kind of perks out of that symmetric triangle. It's holding in this range here. And I go ahead and I take 1090. I think I took 5,000 shares at something like 1090, and I get this awesome move. I ended up selling it at 1480. So I got just a really huge chunk. I made like $25,000 on this move. It was amazing, and that was on my vacation week. So that was really sweet. What can I say about it? I mean, well, it's very clean. I mean, but the thing is, I avoided all of this chop. Like, I could have overthought this and then started playing this chop and gotten beaten up on this chop all day, but I didn't. I waited really patiently until kind of that late day move. And that's what I'm seeing a lot of. It's, you want to avoid everything and just play the late day kind of moves on consolidation that has been clean and held all day. So it's a very slow flow. I mean, think about how long this took. It took, what, 4 or 5 hours to form this and work? That's a long time. That's a very long time. And that's just a very long time to be consolidating in one flow. But that's kind of again, it's a slow market, so these things are taking longer. Taking a lot more patience. Yeah. Something like this, I mean, this is really, really hard to play. Just because of the spread and kind of the uptrend came out of nowhere, and this one happened randomly in the middle of the day, which you get the point. It's very tricky right now. I know Dogs was a recent play. It had sold off a ton from 890 and it went all the way down to 258. Now, I was aware of this, right? But I'm gonna tell you why I had a hard time with Dogs. Oh, there's another play I wanted too. What was that? Oh, there's another play that I wanted to talk about. Oh, JWEL, because it's like very similar to Dogs as far as it was very high and then it sold off. And on that day too, it looked great. but then it didn't really hold up and it sold off quite a bit. And I played this because I thought of it like a descending channel, and I thought it was going to break out of that descending channel and it would be able to bounce. Because I mean, look at the price, it's at 5. It was at 25. It's down at 5. I thought it could definitely bounce and turn into a halt play and get back up to 7 at least. At least I thought 7. This was a very tricky play. Very tricky because of the spread and the way it was flowing. It was just really, really hard. And the best I could do was like, I got in at 540 on this curl, as it kind of in the morning had a really healthy trend, but I didn't really feel comfortable. I didn't really know how to get involved. I could have tried to scoop the dip, and that's what I got to get comfortable with, just buying the dip, putting in a sitting limit at some lower price points, trying to get a better price, because getting in at 540, if this doesn't work, I'm going to be taking a substantial loss. But I just figured, hey, it's curling, I can get it at 540. Yeah, there's 20 cents of risk, but if it works, I can get $7, right? That $7 price point. Well, it shoots up, everything's looking good, it's forming good consolidation, everything's going according to plan, right? Gets over 6, I'm like, cool, let's see if it can hold up 6. Well, I don't even get time to analyze anything because it just instantly fouls. And before I can even really react, it's all the way back down. So now I'm thinking, well, is this a scenario where it's like a sell-off to the support of the range, and then is it going to chop a bit, recover, and then curl? And it's like, at that point, it's down at 550. I just lost $7,000 of profit in a second. I'm not going to sell it here at $554,000 win when I was just up about $8,000 at the peak. At that point, the equity kind of, in my opinion, it suggests just waiting it out, because it's either going to bounce, hold the range, and recover and go higher to that 7 area like I imagined it would, or okay, it's going to come down and I'll have to sell it. I ended up having to sell it, and I ended up selling it at 538 for a $200 loss. So scalp everything, right? I'm kind of, I guess I'm just getting back to that point where it's like, I'm just gonna scalp everything. Because this play does that and it screws me, and then you got to play like dogs, where it breaks out of the channel, it starts uptrending, it finds a halt, that halt goes into another halt, and it goes from the 260s to the 380s. That one goes to $1 a share. It was the same type of thesis. It's down a ton, it had a bounce. JWEL, it was down a ton, it was on a multi-day scale, sure. I think it needed a lot more time to kind of wash, but it was down a ton, it broke out of the channel, it consolidated, it didn't even find a halt, it just failed. So there's no consistency between the names and between the plays. There's just no consistency. And this one happened so fast on day 2, where JWEL on day 2, it perked like dogs did, and it failed right away. But dogs, it perked, and it went into a halt and found another halt somehow. And it's like, even bullish plays aren't finding double halts like this. Yet dogs, this super sold off play, did a double halt, which you just don't see a lot of recently. So the consistency is all over the place. There's like no consistency. And of course, I mean, I'm aware of dogs, but at this point, it had gone up so much, so fast. I missed this entry. And then how do you get involved in this higher range? How do you get involved here, and should you even? Because the market's so choppy, if you get involved here and it fails, you're going to be taking a big loss. But that being said, I mean, it does this weird thing where it fails consolidation, it comes down to support, and it holds the support, and it goes higher. It's so fast, it's so choppy. I mean, I really don't see how anybody, especially in this current market, how do you play this with consistency? I mean, I can't, so I didn't touch it. I'm more into letting the plays consolidate in a healthy way and then getting involved again. Well, I did that. I did wait. I was watching dogs. It's a volatile play. Cool. Great. I did get involved again. I got involved in the 340s, okay? But every single time I would try to play this for a trend change, every single time I would try to play this, I got screwed every single time. It would get weak and come back down, almost like it was like an algorithm trading it or something. It was just some of the weirdest price action. And then, you know, it did this false breakdown recovery pattern that I've seen work great in the past. So now you get the situation where it fails the range, right? It fails the range, but then it doesn't sell off. It actually recovers the range late day, and I'm excited about it. I'm like, this is gonna work great. So I start trying it again. I try to play this, but it got weak. I try to play this, but it got weak. And I ended up taking quite a bit of losses on this. I probably lost $2,000 on this, or $3,000. When it's all said and done, I probably lost $3,000 on dogs. So, and what ends up happening? It doesn't work in all the spots that seem like it would work, or even this late day didn't work. It popped after hours. It did the exact play I wanted after hours. It's like, there's no consistency at all right now. If something has a big move and you miss it, it's better just to honestly not touch it for the entire day, because the chop is so insane. There's no consistency. It's just better to leave it. I mean, pretty much. It's just better to leave it. And again, most of the time when things have big sell-offs like this, it really does not produce that great of a play on day two. On average, it really doesn't. Like, this wasn't something that I could have anticipated, because this never happens. Like, this is very rare. Show me a sell-off that's this intense with a day two with this much range and scale. It's very rare. Usually they do what JWEL did. They'll have like a pre-market move, or in this case, it does this little perk in the morning. When the consistency that I see is kind of like this entry here. Okay, so then you get this kind of this entry at 820, and it's just a scalp, because then it comes right back down. It's like, if you don't scalp that real quick, you get screwed. And this day two led to nothing. So could you have anticipated this dog's move? I mean, I really don't think so. I really don't. It's honestly kind of a non-play for me. This one happened to work great, but most of them don't. I guess going forward on big sell-offs, I will look for a day two entry to see if this can be some type of trend going forward. But this range was not easy. This was a 10-cent range each candle, and I mean, when does it get consistent? Big sell-off, a little bit upside, pretty big sell-off, some upside, but it could have easily just sold off again, a big sell-off again. It didn't. I suppose it holds this horizontal, and then I could have thought of it like a 3-minute flag setup, and I could have taken 264, risking 258. Okay, I mean, that's a good risk reward entry. Yeah, but again, you're talking about 50 stocks you can watch on the day. Are you going to pinpoint this dog's play, this one play out of the 50 you can watch? You're going to play, or you're going to watch this one on something that just died, essentially. Most plays that die like this don't have a day two this great. I'm as a trader, like, I look for things that are consistent. I look for patterns that are consistent, and to me, dogs just wasn't something that was going to produce a consistent result. So I left it, but of course it turns out to be the best play of the day, essentially. So most of the time with me, I'm never unaware of anything. I know every single stock that has moved on the day, every time. I'm aware of everything. It's just how they form, the flows. Is this flow consistent? Could this be predictable? That's really what it comes down to. And I just couldn't feel any consistency in the morning on this, as far as why I would pinpoint focus on this. And lately, if you don't get that precise perfect entry zone, there's just too much risk. So I really didn't feel comfortable getting involved or chasing it. That was out of the question for me. I'm not going to chase this. So at that point, I just missed the whole play pretty much. Okay, so let's see. Other than that, yeah, hopefully the AACG swing trade will work out. As long as it doesn't go below, I might even risk 2, honestly. Yeah, I mean, I'm willing to hold it. Monday, it might be choppy. It might do something like this, where maybe the next 2-3 days it holds between maybe 220 and 280, kind of up and down. But ultimately, I am hoping to get, however this consolidation forms, however it forms, I'm hoping to get some price action that will continuously form higher lows, forming into this level, and then break out of 3 and hopefully get a bigger picture move to 4. So my target is the 4 area. That's my target. We'll see what happens with that. Honestly, I'm not feeling too great about it, and going forward, I'm just going to go back to scalping everything. No more swing trades, just forget it. I'm just going to scalp everything. Time frames, I'm gonna take time frames into account. So I'll play the morning, but specifically I'm gonna start getting up earlier. I'm gonna play the pre-market because those trends have been hot and they've had the range and the scale that I like. So pre-market's gonna be a thing, a main focus for me going forward. And then I might play a little bit in the morning on a good multi-day setup or something, but basically after the morning I'm walking, because the afternoon has just been a good way to lose a bunch of money. So no more trading basically after the morning trading. I'll show up, maybe play the last hour of the day, because those late day trends are working, such as ISPC, such as AACG. You can see how that late day consolidation started to uptrend, and that led to a nice play. So the plays are showing up late day, but you got to be careful with the chop intraday. Just losing a lot of money recently on things like that. So I'm going to try to be very selective, try to avoid random nonsense, try to utilize limit orders on support. I'm going to try to do that more often. So there's things I can do, adjustments that I can make going forward that I feel will help my consistency. Let's see. G-Box was kind of interesting, but couldn't get the feel for it. I kept looking at it and was like, I want to play it. Do I want to get involved? And I just never did. It just gave me such a weird vibe. I just couldn't get the feel for it. That's the main thing with me lately, is like I'm just having a hard time getting the feel for a lot of this stuff. MRIN, just a random strong pop after hours, and then where's the play? I mean, like, scoop this large range in the morning as a dip buy at this former support, get the bounce. I don't even really like this, to be honest. I mean, again, a lot of stuff I see it all, right? But do I really like it that much? And I mean, the answer is not really. I don't really like the stuff I'm seeing that much lately. I'm aware it exists. I'm aware it has a nice range. I'm aware that, okay, some nice plays happen, but you're also getting a ton of examples that screw you. And it's kind of like a lack of consistency, a lot of names, very few and far between even work, and the ones that do work really don't have that flow or really setup that I'm even that confident with to begin with. So, you know, it's slower this week. Now, again, with my vacation week, I made 40K and I was really feeling it, and I didn't really have trouble at all. So it just comes down to I need to pay closer attention to the overall market condition. When that market is uptrending, it's holding gains, it's at the highs or whatever, yeah, it's great. It's great to trade in. But when the market's red, when it's going down, everything kind of gets harder. And when things get harder, that's when you gotta really shift. And look, we can all do it. I know I can do this. I know it. I know I can do it. It's just going to be more challenging, okay? And I just got to really shift into playing more pre-market. I think that's going to be important. I've seen so many great pre-market moves recently. I think I just need to do a better job of capitalizing. That's all. We'll see. We'll see. Look, that's the plan for 2022. Just be a bit more precise. HGSH gave me a pretty hard time. I was trying to play this area, see if I could get kind of the retest and a breakout. I get involved, it comes down on me, I have to cut it. May have got involved in this area, it was slow, I didn't feel comfortable, I cut it for a loss. You know, it's like this stuff just plays mind games after a while. Like I get involved in this area, I think I cut it. Yeah, I cut it for a $50 loss there, and then it just randomly explodes. And I guess it's not random because it is holding higher lows, it is holding a trend, but like it's hard. You know, you hold these things long enough, a lot of them go like this. And so I don't really want to be involved too long in these. So it just comes down to, again, what I was saying before, dip buying. So it sells off a lot. It gets this perk, and it's like holding this range. Okay, maybe I just put in a sitting limit at 240, and I would have gotten filled. And then at that point, risk maybe this 233 low of day. So the risk rewards are showing up in kind of different ways. So now it becomes optimal to kind of just say, well, it's down a lot off the highs, it's kind of holding a range, let me just put in a sitting limit. If I get the fill, okay, I'll risk the low of day. So, you know, it's almost like precision when it comes to time frame and ranges are more important. Precision when it comes to exact entry and timing are less important. So they almost don't even matter right now. You just want to get in the idea of what's a good range, where's a good support area, what is good risk reward, how can I utilize the limit orders at support to try to get some better risk rewards and some lower price ranges where I'm not going to get completely screwed if it doesn't work. And I think the answer is those early morning dip buys are appearing to be pretty good. Because kind of with this slow flow, you get a dip buy in the morning, it took all day for it to find that upside. So, hey, that's all I can really say. Other than that, okay, you get a quick pop, great. Quick scalp it and let it come down. I mean, look at where this panicked. This panicked all the way back down to 260. So wherever you get in, you get a quick pop, you're up a lot of money, great. Lock in those profits because you don't know, because statistically they do. They come all the way back down, and then you know what? Put in a sitting limit at that former support at 265. If you had a sitting limit, boom, probably would have got filled. And then it comes back. And you got an additional play out of that, right? So a lot more scalping and then scooping the dip is going to be a big part of my game going forward in 2022, most likely. So that's the game plan. Yeah, so yearly recap. Here it is. That's the video. The yearly recap is really just a study video because that's what's most important right now. Putting in the work to study, looking at your game, looking at the decisions you're making. You know, I'm a strong believer in you can't let the market turn you into a victim. I'm not a victim. I'm a player. And good players, when they're not playing great, they analyze their game and they make adjustments. And that's what I'm going to do. So, thanks for watching the video. 2021, amazing year. 2022, I do not expect to beat 2021, and I'm not going to try to beat it. I'm just going to try to show up and do my best, you know. I'm fortunate when the market was very, very hot. I made a lot of money, and I'm good for a very, very, very long time, which is a great feeling. And I'm very grateful and fortunate to be in this spot. So, look, It's okay if I don't progress. It's okay if I don't make a bunch of money this year. It's okay. That's really what it comes down to. It's okay. You just got to try your best, show up, be optimistic, be positive, make the changes slowly but surely, adjust, learn, and I think I can start uptrending again. I think I can get it together. Yeah, thanks for watching. See ya.